Alright guys, good morning. Just 20 more seconds to the bell opens here. Index is trending down into the open. If we can't get above 71s, we'll see how quickly we can drop. Basically gonna be moving right into a gap fill. I'm gonna get rid of the extended session here. Remember, this gap opens up at like 62s and we're trading 66s or 67s. So if we stay below 71s, it's a pretty bearish sign. I'm really interested in seeing what we do in the first 30 minutes rather than, have too much of a bias before then. But if we start losing Friday's lows or rally into the halfway back short. So the halfway back short up above us is like 74.5. And then oils looks like it's gonna make its way down to what I've nothing till 55.02. Gold is in an extension to extension sequence. If we stay above like 34s here, it's just going to continue to go straight up. Watch the resistance at 27.73 in the ES. If we get up there, that's like a sell level for me. I was thinking about flying my drone over his house and dropping a jersey down, telling him to sign it. On occasion, I wouldn't say, usually if I'm fishing or golfing, I'll light up a stogie. buyers off the open, and the Russell, of course, performing the best here. So remember, the Russell and the Dow were the stronger markets. The first market to actually go positive on the day, it looks like it could be the Nasdaq, but we'll see what the S&P does when it gets up to this 2773. But it's been nothing but buyers so far. And the Russell is leading the way off the extension. Right off the bottom of the range and the support. I just don't have the thing is, what I don't like about this rally and why I think it's just choppy is there's not really a clean sequence in here. Not like a very clean sequence. Unless, of course, that could be, no, it's front run. I've personally never read a good book on fibs. I've looked. I mean, there's most of them are very basic. The best thing to do is just to go back and study previous price history and draw and draw and draw. That's going to make you better than any book you're going to read once you understand like the basics of the sequence. Yeah, I mean, bulls here held some of the support levels they needed to, but I still think, you know, it's going to be a choppier day. And if the Russell starts breaking new highs, then yeah, but now that we've rallied aggressively, I've gone back and looked at where this came from, and it's this draw I missed from the 5th. It's an extension from the 5th to high. which I believe I drew in the Dow. And we traded right into that 38% retracement, but it was front run. So it's just not that clean. The Russell was clean. It was right to that 38 too, and then it bounced. But the S&P, I mean, the Dow was front, the Nasdaq was front run. And that could just be a sign that bulls really got it. Because we are, you know, straight up in this first 15 minutes. I just wasn't paying attention to it. I mean, there was really no reason. I wasn't looking at an aggressive entry into a long trend this morning, so I didn't draw it. If I was, then I would have drawn it. But yeah, obviously, straight up buyers there. David, if I was like this morning, if I said, oh, that extension traded, let me try to get an entry, I just wasn't looking for an entry in the Russell. If I was looking for an entry in the Russell, then I would have been more aggressive with my draws. I just didn't have like a very aggressive bias going into the morning in these indexes. And when I don't have an aggressive bias, I won't look for aggressive draws. I haven't checked that draw, but I'm not really interested in anything but that extension right now. But I'm sure, you know, it's probably halfway back from the contract rollover to high. It's exactly where it came in. And it very well could be, you know, what holds. So like if you really like that support level, then you start looking for aggressive longs out of it. I mean, to me, I'd like to see that lower entry, but this absolutely could hold. Because we had an extension previously, and so I just want to see that trade again. If anything, David, what I would actually draw is the extension to extension. And we don't typically go from extensions to traditionals. We go extensions to extension. So if anything, I would see it as an extension to extension. And to me, you know, that I actually like. So if you want to look for an entry here off of that, that is definitely valid. The extension to extension is definitely valid. But we don't go extensions to traditionals very often. And if we do, it's over the course of like a few days. I just don't like that pattern. But that would be similar to what you saw here in the Russell this morning. So you saw a reaction off the extension basically to the tick, and then an aggressive entry right before the open. So that would be here. You know, you do have a really, really good reaction. And then you can look for, you know, that next pullback. And sometimes when I'm unsure of levels, I'll let them trade, see how they trade, look for a reaction, get in the reaction, and take it that way. You know, it helps me avoid like stop outs, especially when we're free falling. Really hard to buy a falling knife. Unless you're super confident in the level. You know, you're not gonna see every level before it trades. Especially after, for me at least, a 3-day weekend. As far as markets being more technical than other markets, Trevor, the thing to pay attention to is the overall directional bias of the market and what market's performing the best. So going into the day, the Dow and the Russell were the best performers to the upside, and the general trend bias has been higher. So the better performers are going to act more technical, because when we are in a situation where there's a trend, markets are technical. When there's no trend, they're really not technical. They're just consolidation, and that's when people really get chopped up. So as far as the Russell being technical today, more technical than the other markets, it's because it led the way higher and has been leading the way higher. And then therefore, you really want to give the Russell more weight than, like, say, the NASDAQ, because the NASDAQ's been weak. Oil's just ripping now. We continue to trend higher here today. Let's just take a look at those potential profit targets on a breakout. It's all the way up at 27.93 in the S&P. And then in the Russell, it's 15.76. So continuations here. Let's not ignore where the potential profit targets would be. I mean, what I was looking for is really just a break above this 61.8 to confirm, and we haven't done it yet, but it'd be close. This pullback is decently shallow. Any halfway back from low. There is an extension here in the NASDAQ. If this extension hits profit targets, you could look at a same anchor new high. So if we trade 70, I would just wait till 70, like 70, 80 actually, and then draw a same anchor new high. Or in the S&P, the full halfway back long, I would be willing to even front run this 70 quarter at like 70, 75. For entries, I always go down to the smaller time frame and try to like really look at, okay, like what's holding here. I mean, we're just really just getting bid straight up. There's not a pullback. And that's staying nimble. Take your stops, move on to the next trades. Don't hold your losers. You hold your losers, it's really hard to get back from anything. When you start holding losers is when it becomes much more difficult to trade profitably. This sequence, Fred, it's an extension to extension. It's from the high of the 13th to high. That was the same anchor new high I was drawing, and it just ended up holding an extension to extension, which I totally just missed drawing. Little rusty after a 3-day weekend, I guess. But when you see a reaction like that, you have to look back and see, is there a reason it came from? Because then you can say, well, if we continue to trend, we got to move up to 57.25. That's $1.25 still. So if you can get long a halfway back here, and I mean, right now the halfway back from lows is a retest of the 38.2 near 55.94. That'd be a great entry. So like for here, a more aggressive sequence, like if we're not going to get the full halfway back in the ES, because there's a really aggressive extension sequence, would be right now, this is, and it's on the smaller time frame, 27.6875 to high, just hit this negative 23. So if we get a negative 61, we very well could just go extension to extension through there, and it's like basically very small pullbacks. Gold continuing to rip. Yeah, I mean, if you ever like David, if you ever have a situation where you have a draw that maybe I don't have in my morning trade plan, number one, don't let me talk you out of it. You know, don't let me talk you out of anything. Or two, feel free to bring it up to me, because I mean, you know, you're gonna see things that maybe I don't see. $10. Well, it's $10 a tick. So like a full point move is $1,000, but it's $10 a tick. So like if you catch a move from like $55 to $56, that's $1,000. Every single tick is $10. Same thing with gold. Every tick is $10. So like 37.9 to 37.8, it's $10 per contract. Full steam ahead. That's a one lot. Yes, so 3 would be $30 a point. That's pretty big size for oil. I mean, basically a 10 tick stop out is $300. Yes, and it will eventually trade, or there will be some kind of sequence where I look at it like, you know what, this looks plenty good. This looks really technical. Just kind of slowly floating up here. I'd favor the 38 too. Just because we're super aggressive here. You know, based off the price action. I mean, I think it's a possibility to go extension to extension here. If we start making new highs, it's what you're going to have to draw. It's just like, it's a really slow market, but at the same time, really aggressive. I mean, the 5-minute bar ATR is like less than 2 points. We really need to clear, if we can clear 2780s, then that's when you can really start moving. Upside targets in play. We're gonna go extension to extension here. Just this is really aggressive. It's super tight. Just know where those upside targets are. I'm gonna delete the lower draws just because, you know, they're not really in play. I have to go down the smaller time frame here. It's probably just slightly off, but so there was an extension from 70.47 to high, and it's actually this high right here. So it's that high to high now, and you can see it's obviously super tight. And it just traded 38, like very tight, but it's there. Plenty of room to run. Looking at 74.25 in the ES. Yeah, I would go with the Russell. It's the strongest index. Alright guys, 4 more minutes to the first hour is finished. I've updated my levels in the MLT Discord, and we're just continuing to gun towards those targets. There's like no sellers here. It's just a float right now. Just a float. Bullish trend continues. I would favor the charge or the extension. As long as we trade it here before like the next hour by 10:30 Central. Gold is going to be running into its 13.14 profit target, or 13.42. Nice, David. First trade's a winner, always a good sign. Not always, but good sign. Yeah. Gold just straight up. As soon as though, Makari, as soon as we hit that profit target though, I'd stop pulling it up. Because you have a higher time frame level there, and I would just kind of wait. Because if we hit 1342 before pulling back into that extension, you don't really want to be getting long, because there should be a lot of longs exiting. All right, guys, 9:30 here. Hit me with your last bit of questions. Could get a little choppier now. We've spent some time up here without trading the extension, so 73.25 is a level I'd look at below in the ES 73.25. And this Nasdaq extension is coming in for a second test, so Not that it would be an aggressive break, but it could just, you know, drop a bit into the next level, like 70.66, and then pop. Shake out some longs and then go. All right, everyone, have a great day, and I'll catch you guys in tonight's video. Take care.